Everybody, got another informed investor for you here as we end June and move into the summer. So some charts on where we've been, as well as where we could be going. And as always, some interesting charts at the end, including some info on the SpaceX IPO that you're. So rate talk last week came through. The US Fed held their rates where they were, but suggested the rates could start moving up by the end of 2026. And as you can see by that orange line, the indication that earlier when we started 2026, 6 months ago or so, was that rates would start to drop by the end of the year as the economy would get weaker. So what we've seen really is that job numbers have stayed okay, inflation has stayed high, and the economies, although slow, have stayed strong through the first 6 months of the year. So outlook's a little more positive, and the inflation rate staying higher has the Fed indicating that rates may increase through the end of the year. We'll see what happens there, but that is something to keep an eye on. As far as the markets go, we've seen some weakness in the larger tech names, the growth names that have really driven the markets. Not so much in the last year, but definitely the previous 2 or 3 years, and really even the last decade or two. Those big the Mag 7 tech names in the US, but many others as well, really driving the growth. And you're seeing those more defensive names, those other sectors, not as strong, but that has changed over the last year and over the last 6 months, especially here. This is the small caps, so smaller companies in the US. Same goes for Canada. So definitely a case for being diversified. If you were to just buy the weighted S&P 500 or global markets even, you would get heavier weightings in those big tech companies. So diversifying into smaller caps, medium cap, into different sectors, and of course different geographies can definitely smooth out that investment line and potentially help those returns in the long run. Another similar chart here is on the industrial side. And there are a few more of these if you look at different sectors. Another one that's been a big gainer over the last 6 to 12 months has been emerging markets. Very strong returns there. So want some exposure. Again, well-diversified portfolios, not all your eggs in one basket, so to speak. Why can the markets continue to move up? As you know, we've seen a big rally, especially since the March lows with the news of the Iran-US war. But as I've said in the past, the expectations on earnings has actually risen faster and higher this year than the stock market has itself. Now it goes to come to fruition, or they continue to grow as we kind of chop quarters out here and earnings continue to grow. And there is a case with this correlation between earnings and the markets that the market could continue upwards. So we'll keep an eye on that, but indications from corporations that earnings are going to continue to grow. As far as the rest of the month goes here, very short term, as you know, we don't trade on short-term noise, and really we're only talking, half numbers here. But you go back historically, generally the end of June is a weaker period. As we move into summer, things get slower. So just keep that in mind. Don't worry too much if we do have a weaker period here over the next couple of weeks from June to July. This is an interesting one, just to again keep perspective. The average market return being kind of 8 to 10% going back over 75 years. How many market years has the market actually been positive 8 to 10%? You can see only a handful there. Look back 75 years or so. We're up around 10% right now, and we're only 6 months into the year. Does that mean we're going to be at 20% at the end? Or are we going to drop back down to the 8 to 10% range and kind of flat through the year? Of course, no one knows, but it's unlikely that we are going to be in an average year of 8 to 10%, and that's just not the way the markets work. See, of course, way more years to the upside compared to the negatives, but we do get those negatives thrown in there. So just a reminder, keep perspective. Yes, 8 to 10% on average per year. If you have a long-term goal and you're investing for the long term, that's what you can expect, but you are going to get some outsized gains and some outsized losses. Here's what I was talking about earlier, alluding to SpaceX. This was closer to the high on SpaceX. The IPO was $135 US, started trading at $150, and about a week later, it was trading at $225, and it's come down over the last 2 or 3 days. So very volatile over the first couple of weeks of trading here. But at one point, SpaceX was the fourth largest publicly traded company, moving higher than Microsoft. And of course, the earnings and the revenues on SpaceX nowhere near any of these companies at the moment. And as some IPOs do, and of course, this was the largest out there, trading a lot of speculation and volatility to start. So we'll see where that evens out, but still a very highly valued company, especially relative to the amount of its current revenues. So that's an interesting one to watch there. As always, we'll be back in a couple weeks with more charts. Things do tend to get a little quieter through the summer, but we'll see if that is the case. Either way, I hope you enjoyed the beginning of summer, kids getting out of school, and the weather is good for you as we move forward. Enjoy some time to rest, relax, and recharge with family and friends. Take care, everybody.